MT asks, are swing signals for stock purchases and active signals for options? His itty bitty baby brain is about to explode, especially when I'm using a 20 EMA or a stop. That's a wonderful question, MT. So let's pop over into OVTLYR and let's take a look. Hang on, my antivirus is all over the place now. Let's take a look at the swing versus active signals. And share my screen. Cool, we're in. Okay. So first thing you'll notice is that when you are talking about the swing and active signals, when it comes to ETFs, they're one and the same. They're one and the same. So if we go into QQQ and we switch from active to swing, nothing will change. Literally nothing will change. Let this load in just a moment here. All right. We're going to change from the swing signal to an active signal. Hang on, let me take a screenshot so you guys can see what I'm talking about here. By the way, I updated the value zone indicator yesterday, so it's easier to see and the bars don't get hidden. Okay, so this is on the swing signals. Let's pop this over to active signal. Now, when you change to active signal, it changes everything. It changes market breadth. It changes your screener. This is a global change. So when we pull this up here, just a moment, you'll see there's that sell signal, there's that buy signal, there's that sell signal. They're one and the same. But let's go to a stock like AMD. I always like to pick on AMD. Let's go to AMD. Let's take a screenshot of its active signals. Oh, there's not that many right here. Let me find one that's got more active signals so it's a little bit easier to see. What about HIMS? Let's see HIMS. Okay, we've got a decent amount more signals coming through here. So this is the active signals. All right. Now let's swap this back over to swing signals. Hit apply. And let that load in on HIMS. And pull this down. We should see less signals. They're roughly the same on this one. Yeah, it looks like they happen to be the same on this one. But active signals, in a nutshell, unfortunately, I couldn't find a good example off the top of my head. Active signals in a nutshell. You can't have a buy active signal unless you have a buy swing signal. So an active signal is like a double confirmation signal. But you can use them on stocks and you can use them on options no matter what, right? I've been doing that for years, right? You get the signal, you plot it on the you plot it on the chart. Say, okay, this is where I'm going to get in. This is where I'm going to get out. Let's go over to HIMS. This is where I'm going to get in. This is where I'm going to get out, kind of thing. And then you just execute on the option. So it doesn't mean necessarily that one is for option purchases or swing signals are for stock purchases. At least that's not how I'm trading it. However, I always like to say, come up with your own plan, trade what your plan is. And if that's how you want to trade it, by all means, go for it. Patrick, could you explain why the 21-day to expiration is your preferred contract length? Yes. Now, I am an options junkie. So let's talk about that. So we're looking at, let's go to AMD. Let's go to AMD. All right. So you can see there's weekly options, there's monthly options, there's quarterly options, there's options all over the place, right? Why 21 days? So at 21 days, this gives me an opportunity to trade without running into gamma risk. We just talked about a huge thing of how important gamma risk is on the options deep dive video. I would highly recommend watching that video. We just recorded that on Wednesday. If you go into the playlist section on either of our channels, you'll see it part of the options deep dive playlist. So now I like the 21 days because, in fact, I can tell you right now, let's say, for example, we're trading HIMS and we go to performance summary. The average days in this is 10 days. Average days is 10 days. So if I have a 21-day contract, then I can hold it for 10 days. It still has 11 days to expiration. So I'm not running into any gamma risk. That is the number one reason why I like to start there, because most of the time, and I'm telling you like 95% of the time, I'm in and out before I even get to the last week. Now, I don't want to hold it into the last week because gamma risk explodes higher. But let's talk about a couple other examples as to why. Why not go 45 days, right? Why not go 45 days? let's look at the 150 strike. No, maybe not the 150. How about the 145 strike? The 145 strike on AMD is 82 delta. And the extrinsic value here is $2.13. So 2.13 divided by 18.5 is 11%. So 11% of the contract is extrinsic value. Remember, extrinsic value will go to zero every single time on every contract, every strike, every stock, forever, no matter what. This will decay. This will work against you, period, permanently. However, it's only 11% of this contract, so that's not that big deal. If we go out to the 42-day option, and we go to the same 145 strike, that one is $4.75. 4.75 divided by 22.35 is 21%. So not only do you pay more for the option in general, 18.50 versus 22.35, you're paying twice as much in extrinsic value, $2.13 versus $4.75, because you've given it more uncertainty value, and you've lowered your delta. Now it's at 75 delta instead of 82. So for multiple reasons, the average trade is less than 21 days. The cost of the option is less expensive. It just hits that sweet spot for me. However, like I say, you can absolutely, for sure, figure out a different way that works for you and roll with that. By all means, go for it. Ladyboss says, what are warrants and are they any good? I've never once traded a warrant. I don't know any details about trading warrants, so I'm not the person to ask, unfortunately. ChatGPT is going to be your best answer on that one. Somebody asked here, Scott, good to see you, Scott. Why do leap options? So a leap option is considered a long-term option. Now that can be subjective, right? For some people that could be 90 days, 180 days, at least a year, maybe 2 years. I'm not a big advocate of leap options. I really don't see the benefit of it. Let's go to January 16th. That's the first one that's longer than 90 days. Let's go to the 80 delta here. You're paying $37 a share, right? $37 a share, and having the same delta as what I'm paying, 80 delta, $18 a share. So you're paying 3 times as much, literally 3 times as much. 1850 versus 37, 2 times as much. You're paying twice as much for the same deltas. I do not understand why somebody would do that. Honest to God, I don't. If a trade is working for you and you want to roll it out in the future and let it keep going, start at 21 days, let it work, roll down across. When I say across, I mean down, meaning we're going from the 145 maybe to the 150. So across means across expiration. So you could go to 28 day, 35 day, etc. But you could do down and up, across, whatever. Point is that I don't see the benefit of a leap option. Now, Theta will decay slower for sure, but I don't know. It's just not for me. But like I say, could be for you. Justin asks, what will the price of Boeing be at the close today? I have no idea. If I knew that, trust me, I wouldn't be here. What's your Dutch Bros recipe? Good gravy. You guys with these great questions here. Basically just go into Dutch Bros and find the most coffee princess order you could find. That's the one I would do, right? Price Hunter says, how many days would we give a swing signal to start working? Okay, great question. So what I'd like to do here is pull up our PowerPoint. Still in process, still things that I'm working on. But the swing signal exits are there for you. So Price Hunter, I wouldn't necessarily put it in days to find out if it's working. Reason being is that's super subjective, right? I could say 2. You could say 12. It could be 6. It could be somewhere in the middle, right? I wouldn't look at it as if I need to find out if it's going to work in X number of days. I would say, I'm going to put this trade on, and I'm going to look for one of my exit signals to be hit. If one of my exit signals is not hit, then I keep the trade on. And however long is that it takes, right? That's the point of having the exit signals in the first place. And I would recommend everybody to come up with your own plan. Don't follow my plan. I'm just a random guy on the internet. I have no idea what I'm talking about. Come up with your own plan and then execute that plan flawlessly. If you take the time to create your entry signals, and you take the time to create your exit signals, you need to follow those religiously because you have determined that that is the best course of outcome. Now, if you don't have exit signals and entry signals, stop, start backtesting. You can backtest manually, you can backtest with computer code, you can do all kinds of stuff. If you have access to a quant like we have, you can have him do all the legwork for you. But you need to stop what you're doing and come up with a plan. Coming up with a plan will change everything for you, because once you had that plan, then you don't have to guess, right? Because right where you're talking about there, how many days would you give a swing signal to start working? That's mostly a guess. It's mostly a guess, unless you have an exit plan and one of those exit signals is hit. Elsewise, it is just a guess. One of my mentors, one of the original market wizards and the first billion-dollar hedge fund manager, he specifically mentioned this to me. And I know you've heard me say this a million times, is that if you come up with the plan and then you don't follow that plan, you never had a plan to start with. That's a big mental mind hurdle for a lot of people to get over, because a lot of people come into this game expecting it to be like the lottery, right? A lot of people come into this game expecting it to be like a casino. Oh, it's so fun to trade stocks. Actually, it's not. Trading stocks is, if you're doing it correctly, is boring AF. If you're doing it correctly, it is not sexy at all. It's a lot of time of doing nothing. When you're in a trade, waiting on the exit signals, doing nothing. When you're not in a trade, waiting for your entry signals to hit, doing nothing. That's why I like to say sit in cash and don't F up. All right, let me pull out my little remote here, see how smooth I can do this. Not gonna be smooth at all. There we go. That's why I say sit in cash and don't F up your portfolio. Or in this case, sit in your trade and don't F up your portfolio because you're waiting for your signals to occur. In the meantime, don't do anything. In the meantime, don't do anything because you are literally putting yourself in jeopardy of effing up your portfolio. Richard Garner says, what is the definition of Masters of the Universe money? That's a great question. So I was actually reading this book this morning, The Psychology of Money. I put this down for a minute, but I picked it back up this morning. And chapter 7 talked about how the highest form of wealth is the ability to wake up every morning and say, I can do whatever I want today. I've achieved that in my life. Praise Jesus. I've achieved that in my life at 39 years old. I can do whatever I want today. I choose to do this. I could disappear and you guys would never see me again. I choose to do this. And to me, Masters of the Universe money is completely subjective, right? Of course, who doesn't want more money? That's the point of trading, right? Is the game of acquiring more funds. But the Masters of the Universe money is super subjective, right? Could it be enough to buy a private jet? Could it be enough to buy a private island? Or is it enough to wake up every day and not have to go to a day job? Masters of the Universe money is very subjective to everybody out there. And where did I get that from? I got that from Jerry Parker, one of the turtle traders, who is the most country, unassuming looking dude you could ever imagine. And to hear him say, I want to make Masters of the Universe money, I was like, what did he just say? Let me rewind that real quick. I want to make Masters of the Universe money. Wait. Hey, no way. Did he just say what I think he said? I want to make Masters of the Universe money. He said it. He said it. I love it. And it just like, it stuck with me. And I was like, that is so funny. I love it. Price Turner asks, how many days will be trading a year based on plan M? Great question. So over the 5 years of data that OVTLYR has, Scott ran all the data and everything. And by the way, Scott will be on this afternoon's invitation only live stream. Scott, our quant, today is his last day. He's going back to uni, which I'm so happy for him. I want us to all send him some back to school gifts. I'll share a link with you guys later on because he deserves so much. What he has done for us has been amazing. So I'd like to send him a few presents if we don't mind here. But Scott has been absolutely tremendous. And what he actually came up with is over 5 years of data, 93 trading days. That's not many. And that goes back to what I was saying earlier. Trading's not sexy. Trading's not fun. Trading should be boring. Trading should be effortless. And you don't need to be in the market all the time. You do not need to be in the market all the time. One of our mentors, Mark Minervini, won the U.S. Investing Championship twice, 1997 and 2021, and I'll be winning it in 2026, with 40% of the time being in the market. Guess what he was doing the other 60% of the time? don't know where my stuff is. The other 60% of the time, he was sitting in cash and not effing up his portfolio. And he came out with 300% returns that year. So you've really got to take a step back. Trading psychology is so much harder than clicking the buttons. You and I both know this. You and I both know this. It is way harder to not mess up than to actually click the buy and click the sell. So I want to make sure that you understand that if we're only trading 20 days a year, that's what it's going to be. And sometimes you're going to be on vacation when one of those days comes up and it sucks. There's a story of the Koch brothers when they cornered the silver market. I forget who it was, but it was one of the stories in Trend Following. This guy traded silver all the time, but when the Koch brothers cornered the silver market in like the 70s or 80s, it was before my time. Silver went up like hundreds of percents. And this particular trader always traded silver, but he happened to be on vacation because his in-laws were in town and he missed the biggest trade of his entire life. And he had so many regrets for that. But let's take a step back. For him, he hadn't achieved Masters of the Universe money. And because of that, he was very distraught, very upset, and it became one of his huge regrets because his in-laws came in town and he went on vacation. So that's going to happen. I'm telling you right now, it's going to happen. I'll be on vacation. Actually, I will be out on October 9th. Then I will be out between October 24th and 28th. Could we have trades on those days? Absolutely. And if I miss them, just part of it. Wally Wood, KW says, I'm going to Bali in a few weeks. You want some Kopi Luwak coffee? By all means, dude, let's do it. That sounds great. Why is it no fun shirt Friday? I'm sorry. I was wearing, so a little behind the scenes. I have like my uniform, I guess you could call it, which is this, right? A nice clean athletic shirt with a blazer. And I had planned to wear one of my Dia de los Muertos shirts. I was working on our Ofrenda last night. Our Ofrenda is beautiful. But I was working on our Ofrenda last night and I was like, oh man, I got to make sure I wear one of my Dia de los Muertos shirts tomorrow. And then the cleaners came in and it was like right before the live stream was about to start. And I'm like putzing around everywhere. My desk is a complete disaster. And I just didn't get a chance to go grab one. So that's on me. I'll have it ready for this afternoon though. Is Scott in the green room for this afternoon? Scott's ready. I was just texting with him earlier. He's going to be there. I'm excited. Let's see. Steve, how did plan M do in the bear market of 2022 only? Ooh, I don't know. I'd actually have to pull up my data to find that. Okay, got it for you. That was a fun little interlude, wasn't it? Okay, so the average return for 2022 was 1.387%. 1.387%. Don't ask me to give you any other details because it's going to take me longer to come up with that. The overall average in Plan M is closer to 2%. So it underperformed the overall average, but still turned out a monster return, a huge return. Now that's 1.378% for every single trade put on during that year. And you can see some of these are better than others, right? That was a -8. This was a +5. This was a 1, right? You can even see there were some losing streaks in here, right? This is the reality of trading. There are losing streaks. There are winning streaks. There's not a 100% win rate. But still, Plan M came out with a 1.37% gain on the year, which during a bear market is pretty damn sweet when it's only long only. Only long only. Okay. Arnand has a great question. What are your thoughts on entering on trade based on active signals and exiting based on swing signals? I would say if you're going to pick one, I would stick with one. I would develop a plan and did develop a plan where you've got your entry and exit at the same time, at the same signal, right? It's kind of like saying I want to use an EMA for entries and an SMA, a simple moving average for exits. It's kind of like saying I'm trying to think of different analogies. I personally, and you've heard me say this before, Arnon, for sure. It's pick with one and stick with it forever. That's the kind of thing that I would say. And not to say that you have to stick with it forever, ever. But if you're going to stick with one, stick with one. That's what I would say personally. build a plan for both. Build a plan for both. Let's see. I love this. I love this question. Rock the music. Rock the music. Let's do this. How is extrinsic and intrinsic value determined if those values are not currently given? So anybody can calculate intrinsic and extrinsic, but it does make it a lot easier if your broker does it for you. So intrinsic is how much moneyness, how much Scrooge McDuckiness a option has. Now the option, the market just opened 2 minutes ago, so it could move around a lot as I'm speaking. So take that with a grain of salt. So the way you calculate intrinsic value first is you take the current price of the stock. So let's say it's 160.90. And you go to the strike that you want to trade. So let's say I want to trade on the 130 strike. So you would subtract the 130 strike. That would give you, like I say, market's moving around a little bit, so give me some grace here. That would give you the intrinsic value. All right, that would give you the intrinsic value. This is how much moneyness it has. I always want to start with as much moneyness as possible. Now, there is still extrinsic value here, right? Because you can't buy it for that. You're buying it for $37. You can't buy it for 31. You got to buy it for 37. So then you take the difference between the current price, which I always go for the ask price because that's what you're going to have to pay. And you subtract that to come up with 685, which, like I say, it's moving around a little bit on me. So give me some grace. That is your extrinsic value. That's how you calculate the two. And, you know, it's really just stock price minus strike price to get you intrinsic, and then your current price minus your intrinsic to get you extrinsic. That's how you get there. It's really not that hard. It's pretty easy. But man, is it way easier if your broker does it for you. If you have to do it, it's just annoying. Let's see. Susan, great question. When does the platform refresh? Is it every night at midnight? It depends on your time zone. I live in the central time zone, and it refreshes at 10 p.m. Central time. And then you can see the data that'll be available for you the next day. Robert, good to see you, Robert. Do you have a formula for rolling out but not up an option? Okay. That is, first off, not a possibility. Let's talk about rolling options real quick. Why do we want to roll options? I got a slide for this, but it's not on that deck. Hang on. I need to consolidate my decks over here. This is part of the stuff I've been working on. I have a rolling options slide. This. Okay. So at 1 week before expiration, I wouldn't even touch it. I wouldn't even touch it if it's not a week until expiration. So let's go to the AMD here. If I were holding an October 3rd expirated an October 3rd expirated option, then today I would be looking to roll out. Now, my potential criteria for rolling out is it already profitable? Am I already making money on the trade? If not, it's probably not going to work out anyway. I mean, we've given it 2 weeks. If I haven't had any movement, if it's not profitable, I'm going to go ahead and just move on. But if it is profitable, can you roll out and up for a credit? Now, I want to stress the out and up part for a credit, because if you roll from the 140, so let's say we sell to close the 140 here. Wait, that's the wrong expiration. We're going to go over here. Let's say we sell to close the 150 here, okay? And then we buy to open the 150 just 1 week out. That'll cost us a debit of 78 cents. What does that mean? Anytime you pay a debit, that is risk to your portfolio. So when you first buy an option, let's say you bought it for $5. That is $5 in risk to your portfolio. When you roll it, you always want to take a credit. When you take a credit, your original $5 in risk is now reduced. It may be reduced very small. It might be 50 cents. But now you no longer have a $5 trade of risk. You have a $4.50 trade of risk. Pretty cool, right? And what you've done is you've taken partial profits. That's pretty cool. You've taken risk off the table. That's pretty cool. And you still have the trade on, which is even better. This is something you cannot do with stock. And if you've done this in the past and seen just how valuable it is, put a $$ in the chat, because I know a ton of you have changed the game by learning how to roll and how important it is. Now, that's just usually on the same expiration cycle. But if we're going out in time, we can't roll to the same strike because it will always cost you a debit because the extrinsic value will always cost more. It'll always cost more because there's more uncertainty. So your extrinsic value is going to be higher. I'm glad we talked about extrinsic value earlier. It will always cost more. So you can't roll in the same strike out in time. But let's say you start at the 150 and you roll it out to the 152.5. That potentially here gives you $1.10 in credit. Now we're talking. Right now we're talking. We've rolled from the 150 to the 152, and we've rolled from the October 3rd to the October 10th. And by doing so, we've now taken $1.10 of risk off the table. We've taken $1.10 of profits off the table. We've already taken a 20% reduction in the amount of risk we have off the table. How cool is that? I see lots of dollar signs coming through. It is so cool. It is such a ninja hack. But listen, if you roll it and it says debit, you're doing it wrong. Stop. Stop where you are. Do not execute the trade. You've done something wrong, and that's okay. Errors happen. Go back before you execute it, clear the trade, and just do it again. Okay. Maybe you went from the 150 to 150 and it was still a debit. Maybe you went from the 150 to the 151 and it was still a debit. That's very possible. Maybe you went from the 150 to 152.5 and there's still a debit. That's super possible. And then you went from the 150 to 155 and that's where you find your credit. That is the way to execute the trade. So you sell to close the original position, same number of contracts. And you buy to open the same number of contracts and make sure it's super liquid. And it takes partial profits now, frees up capital, and it keeps the trade alive. That's a fantastic question. And I really, really appreciate you asking that. Let's see. Why did we choose TQQQ from all ETFs for plan ETF? Reason being is because it is a super liquid, triple leveraged ETF that follows the underlying stock that we are using in plan ETF, which is QQQ. So imagine QQQ is the stock we want to trade, but TQQQ is the option we want to trade. So, but we're not buying options. Don't get that confused. We're not buying options. It is just the vehicle that allows us to get some leverage. So this gives 3 times leverage, where normally on my options, I'm roughly 8 to 10 times leverage. So we're not trying to be offensive here. We're trying to be defensive, but capture a little bit of gains in the process. I'm not prior military. No, thanks for asking. I did work at Raytheon, supporting the Air Force, though. It was really cool. I worked on the Predator and Reaper drones, civilian working on those projects. It was really cool. I got to see some secret stuff. It was neat. But my dad was in the Navy, so there you go. And for all of our veterans out there, I really appreciate your service, right? Some of my best friends have been former military. Do you use a meditation program to help with trading? Eric, I love this. Now we're getting the woo-woo stuff. Yes, hell yes, I do. Every morning when I wake up, I have these guided visualizations. Half the time I fall asleep during them. But in reality, it's, executing your plan, visualizing those goals, and then setting yourself up for success. And when I tell you, I do this immediately when I wake up. Like literally, the first thing when my alarm goes off in the morning, reach over, grab my headphones, grab my phone, lay back down, and put it on. There are great channels on YouTube that you can go to and use. 2 of the channels that are my favorite are both Australian women. I don't know why, but their voices are so soothing, and I just keep going back to them every single time. So great question. There will be a beta group. Of course, it'll be an Outlier University series. There will be a beta group. Creating plans, AM, and ETF, and working with Scott took up all my time this summer. In reality, it was the most intensive thing I've done in a while. And we have made unbelievable plans, unbelievably profitable plans because of working with Scott. So I'm very grateful. Praise Jesus for being able to work with Scott. But that did set back the second OVTLYR University class a little bit. So we will be doing a beta class, and I just don't know when that's going to start, but it'll start up soon. It'll start up soon. Let's see. Okay. Sue Keen, that's a great question. Do not set a stop order with ATR. What about with the stock? So set a stop loss order at 3 ATRs, 3 ATR urgent stop during the day. So that goes to Plan M does have an emergency exit signal. An emergency exit signal at 3 ATRs. I will not put in any sort whatsoever of automatic order into the market, period. Because when things move, spreads can widen. When spreads widen, you can get filled when you don't want to be filled. And it sucks. I have had it enough times where I was like, I'm never doing that again. Never, ever, ever. But what you can do is you can go on your chart. And let's say I wanted to put a line, -3 ATR line right here. And all platforms should have this ability. You right click it and do add alert, right? Add alert, add in whatever little details you need to. And it'll notify your phone, it'll notify your computer, it'll do all that stuff for you. And then once that happens, boom, log in your broker platform, make sure you can execute the trade in your own time. It is a huge I wouldn't, trying to think of the right words here. The idea of getting out instantly by your broker makes perfect sense. And if you're trading shares, it won't make a difference. It'll be perfect. It'll be a perfect execution, basically. If you're trading options, you can get royally bent over. I don't want that to happen to you. Let's see. Let's take a couple more questions and we get out of here. The real Bane, definitely not the Hammer Donkey, says, can you give more insight on the 2 ATR stop loss and what that will look like when trading options? Will the 80 delta possibly fall out of the money? It could. It could. It honestly could. But I don't know if I have that data available. Let me see if I do. Hang on. I think I have that data available. This is part of the don't trust me bros. Okay. So this data I do have available. Scott and I are going to be putting together everything you could ever want to know. The average move down for positive outlier return signal. Okay. So if it has a positive outlier return, like when you log in the platform, and it has performance summary, and it says signal return 1191. Okay, that's what I mean by positive signal return, right? We're starting off with a positively back-tested stock here. The average move down after the entry signal comes is almost 1 ATR. What does that mean? If you've put on the trade, on average, it could come down as much as 1%. I'm not 1%, 1 ATR on average before going back up. Let's actually look at NVIDIA. I want to look at NVIDIA because it was here where Chris got stopped out and then it went on and ran. Okay, so this example actually hits home, right? I got stopped out because it was below 1 ATR from my entry point at that day. So I got out. Now, the average move down is 0.94. That doesn't mean that it's a loser. That just means the average move down was 0.94 before doing what it was going to do. The average move down of all losers was 1.63 ATRs. So if it is a loser, on average, the average loser was 1.63 down in ATR. So not even our 2 ATR stop. The average move down of winners was even less. So it was half of an ATR, 0.4. So if it turned out to be a winner, it came down just a smidge, and then it rocket shipped higher. So the average between these two is 0.94. And 14% of the time, it actually hit our stop loss. So 86% of the time, the stop loss was not touched. That's pretty cool, right? 86% of the time, the stop loss is not touched. But only 3% of the time, so 97% of the time, we're not hitting our emergency exit. But 3% of the time we are. We need to make sure that when that happens, we get out of the way. Because some of these ATR values, like when it goes wrong, it can be really brutal, right? And it is important to do this midday because then you're stopping the bleeding and it's not the biggest red candle of all time, which I have traded through. And some of you guys have watched me do that. I have sat through the entire day waiting until my 2 p.m. Central Time to exit as it just got creamed all day long. If it hits that 3 ATR at any point, if it gaps below that 3 ATR at any point, that is an emergency exit. You need to exit immediately. So the likelihood of it falling out of the money is, I would say less than 10% of the time. I would say less than 10% of the time is there any likelihood of it falling out of the money. So 90% of the time, it's not anything to worry about. Does that mean it's going to be absolutely invaluable? No, and that's why we will not go to the last week, right? If this fell out of the money, right, from $10 to, let's say you were holding the 162s, and it fell down, right? It still has value. Of course, it's less value, but it still has value. I don't know if I have this on here. No, but actually a lot of the time, and I don't have the numbers off the top of my head, but I found many instances. In fact, the worst losers in ATR actually would have been completely mitigated, eliminated completely by getting out of earnings. Sounds familiar? Getting out of earnings and rolling. You would have rolled up enough times that when it did reverse, you had no risk in the trade at all. So it's really, really cool. I'm very excited. This is why we've built a full comprehensive plan. Razzie says, when are they going to be released? I've been taking screenshots right now. Great question. Honestly, I'm working on the full slide deck. That way, I can go through in a professional YouTuber sense, do my presenting and understand and get the audience, you guys, to understand where we're going to dig in, where we're going to get out. But all of the plans are done. The rest of it is just like how I'm going to be presenting it to make it the easiest way to flow and understand. And then I really want to have all the back tested conclusions for you when I deliver this to you, because then there's no more trust me, bro. Trust me, bro. It's a great plan. Trust me, bro. I got this win rate. Trust me, bro. You're going to make so much money. Oh my God, bro. No, it's going to be all data based. Listen, I got to run. This has been a ton of fun. And if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos and have a fantastic day. We'll talk soon.